We're on the pound dollar on the 5 range. I just got in this trade, so I thought I'd better be quick here and start the recording. We could just rally straight up here. So this is a head and shoulders on the 5 range. I will just talk through the trade. We had a directional move, a pullback for the left shoulder, a directional move, which is the head, a pullback, then another move, which is the right shoulder. Then here, this was an initial structure high. We violated the outside return, giving us a potential rotation. What we then need is a pullback. I was looking at around about the 61.8 fib. We never quite got there, and we turned and then put in a higher high, higher close candle. So rallied straight into profit here. Stops, I don't have anywhere decent to put stops, so they're down at the very lows here. And targets looking for, well, conservative targets could be right here. However, I am actually playing a little bit past that based on the 4-hour candle closes. What I want to do though is talk through the high time frame analysis, and it's important that we see where we can take head and shoulders and why they occur at certain places, and it's all to do with structure. And there's two main places head and shoulders occur. Well, one main place, and it's usually within the wicks, which is usually at the very bottom or the top of structure. Now here on the daily time frame, there's nothing here like that. If we go to the 240, then we've just had this trade play out, and I've been monitoring this for an entry. Structure wasn't good enough, and there wasn't a good enough entry up here to short the market, but what we have done is we have come into a 38.2 fib, as you can see right there, which is where my target would have been. And secondly, this is the structure level we want to pay attention to, and look, we are within the wicks. Okay, let's drop to the 60. Here on the 60, exactly the same, we are within the wicks, and on the 60 we also had a pin bar. So this is an indication right here at the close of that hourly candle that you should be dropping down to your lower time frame and looking for things like a head and shoulders. There is the potential here for this thing to retest the highs. A little bit too aggressive for me, that. We'll take a quick glance at the 15 while we're here. There's nothing really there. Oh, hang on a minute, let's go back to the 240, and this is what I'm looking at on the 240 is the closes of these candles right here. I think it was those I was looking at. Let's bring it up. Yeah. Okay, so you can see I've got my targets there. So I'm looking at the bulk of this candle. Well, just over half of the candle retracing. And that's because, again, we've completed this AB equals CD pattern. We've hit a 382. We've put in a head and shoulders. So it's likely we're going to see a pop here, particularly with that 60-minute pin bar. I think certainly we could see a pop up to that level. The most conservative place though to take targets is certainly this level right here, but I do believe we can get a little bit higher than that. So what I'm really waiting for is what we're doing right now, to be honest with you. We had a new high, a pullback, another new high, a pullback. Because this would be trend, then I'll be able to move my stops to this level and reduce down the risk and wait for those extended targets. We're back on the pound dollar, and this trade has now gone on and won for 34 pips. I did end up deleting the chart before I went to do the second part of the video, but just to quickly draw this back out, this was the left shoulder, right shoulder, the break above. I said anywhere within this zone we can look for a long opportunity. I got long here, and then stops were down at this level, and as you can see here, then we then double bottomed and rallied on up there to hit for 35 pips. Put in a back pattern there, but anyway, out that trade now for 35 pips. Very quick trade, that an hour or so.